All right, guys, good morning. Good morning. Welcome aboard to the Morning Note. My name is Carlos Garcia, founder and CEO of GAR Capital from a pretty ugly, rainy, and windy Central Florida. Thanks for taking the time out of your day to join me this morning and every morning at 9 a.m. Eastern Standard Time. Let me get this stuff plugged in for now while I do this video. Great. Okay, so a couple of things. First, if you haven't already, please click that subscribe button. We're trying to get to 10,000 subs. I think we're right around 8,600. So join the fight and just press that subscribe button. Really would appreciate it. Let's see if we can get to 10K by the end of the year. Let's get started. All right. So first thing, let's go over futures. Dow was up as much as 200 points. We got to 161. Nasdaq up about 0.8%. Tapering off a bit, you could see here on S&P 500 futures, we tagged 41.77. We are at 41.61. I did not have any risk open for this trade. For this number. I have one runner open on Mara that I filled yesterday with Masterclass, but it's still in the money. We had the $10 strike calls, but other than that, other than the Tesla call I had last week that I held to see if we get this pop. Great inflation number. We did get a little higher, obviously, in terms of the market, but 4,200 looms very large, guys. It could be a lot of supply there. So, kind of glad that we didn't soar directly. Maybe we can get back above 41.75 or so. We could see if we get continuation, but you're still pretty much at a point where both the bulls and the bears now have a good argument. So that means there's no real edge. So we can't really give much in terms of, we're going to get continued upside or not. We'll go over the CPI number here in a second. Russell is up about 1% this morning, 18.15. Crude oil is up 0.63%, 82.04. Again, guys, in the future, if you do like the morning note, get a pen and pad out or type this up because there's some really good information and some really good alerts. Just like last week or a couple of weeks ago, actually a couple of months ago, we talked about gold. We talked about that 200 weekly MA. In terms of crude oil, guys, put that alert above 85. If we get an alert above 85, then we can actually start taking a look at going long, start taking a look at some energy names that have been beaten down, and see if we can profit from that. Gasoline futures are down about that, $2.83. So I haven't taken a look at energy stocks this morning. Let me see if I can bring up FinViz and then you can give me kind of a pre-market breakdown. All I'm seeing right now this morning, guys, is a lot of green on the board. Pretty much across the board. Tesla up 2%, thank God. Maybe we can get a short squeeze of some kind there and I could salvage my contracts for something. But yeah, just green across the board, guys. A couple of reds here and there. You have a medical company red, McKesson. They have some headlines out there. UPS is red. What else is here? McCormick is red too, 3.38%. But banks are up, financials are up, semis are up, energy's up, industrials. Healthcare kind of mixed, pretty much flat there. So again, we know where healthcare stands in regards to the market. Healthcare is more of a defensive name. So again, when you get a little bit of a boost in risk assets, again, we want yields to go down. We got yields down 3.383%. Again, with a weaker CPI number. Kind of the same thing we talked about earlier this year when we had our video, kind of preparing ourselves for 2023 for Investment Club. And with that being said, again, we know about the dollar going down. We said dollar going down, lower yields, lower inflation, right? So far, so good. It has worked for Q1. We did get that CPI number. Let's go over that quickly. Let me see if I can get this number here. So when you have core numbers and then you have regular numbers. So core is excluding food and energy. But here's the inflation number over the past couple of months. We just got a 5% year-over-year rating number. Just to give that in context, last March, which was in 2022, CPI was up 8.5%. So again, we're at 5%, lowest March, lowest in 2 years. So imagine that. Was this transitory? That's really the question now. Was over a year transitory? Well, that remains to be seen, or depends on perspective. But to get the exact number, I got to scroll down a little bit. Again, we had a 5% year-over-year actual, 5.1% forecast. I expected us to be at a little hotter than that, maybe around the 5.5% area. We did not get that, but again, we got lower than 6%. So pretty good to see some deceleration in inflation, just deceleration, not really deflation. Again, it depends on the way you look. We had a really high bar in 2022, again, 8% a prince. That's not very usual. So The best analogy I can give is during COVID. When we had COVID and we had that mass unemployment, everyone was basically closed. Yeah, we fell directly. Even the smallest bump is going to look great when you have a big flush. Again, you could do that with crypto stocks. You can do that with any kind of data. So all we're doing, in my opinion, again, I'm cheering the inflation number, but all we're doing is trying to get back to the mean. We're trying to get back to 2019, and we're not there yet. We still have a lot of work to do. I still say the Fed will raise 25 basis points. If that seems to get inflation a little more down while the employment number stays the same, 3.5, 3.4% unemployment number. The problem is that that's pretty unsustainable and that's almost never happened. So when you have inflation fall, understand that that is really demand falling. So again, we know where we are. We are a consumer nation. 80% of or 70% is consumer spending. So if we don't have demand, guys, that's where deflation takes over. And the Fed cannot manufacture demand. Yes, they can adjust the money supply. They can't change supply chains. That's 2022, right? Well, that's already fixed. But they can't manufacture demand. We can, the United States could throw money at people, sure, give them stimulus checks. That's fine, but they can't force you to spend on certain things or certain places. If people took that money and paid off debt, that's not exactly helping the economy. But if they use that to go out, to travel, to go out to eat, that's a little different in terms of economics. So again, great inflation number. Again, I'm not going to sit here and say it's bad, but again, guys, we're just getting back to where we need to go. So again, some good news, but take it with a grain of salt. This is why the market isn't exactly going crazy right now. We're starting to get to really key resistance near 4,200. We need to break that. If we don't break that, guys, okay, we're going to probably retest 4,100 today. And so far, we've been holding it. I'm not saying that we're going to fall today. In my opinion, if anything, we could just chop around this area. We do have PPI tomorrow. That's the producer price index. But again, 4,200 is a very key level on the S&P 500. Maybe tons of supply up there in terms of the buy-sell action. Does 4,200 really mean anything in the big picture? You have two sides now. 4,200 on the S&P 500 spot. I think around 4,210. That's a 20% move from the October lows, guys. That's a bull market. So we know how big psychology is in terms of the stock market, right? We talked about how big that 30,000 level is on Bitcoin. Now you're probably taking a look at 35,000 to fill that gap. It doesn't take much, guys, to really light that match in an environment where everyone is so pessimistic. The most net shorts in the S&P 500 futures since 2011, in almost over a decade. So again, you have a mixture of pessimism, waiting for the next shoe to drop, or I missed the bottom in October, that kind of narrative versus, I'm not sure yet, I'm a little bullish, or right now I'll keep buying, but I'm still chopping around. So you have so many forces. Again, like I talked about at the top, there's not a lot of edge. You need to break 4,200. If you try to get under it, maybe 4,175 on futures, but even that doesn't seem that confident yet. Good news, but not good enough is my point. Let's answer some questions. What does this mean for gold? Can we see a decline this quarter? If you want to trade gold, all you need to take a look at is the dollar. And the dollar is going to break 100, guys. That's coming. 0.49% to the downside, 101.70. When the dollar is down, gold, Bitcoin, commodities are going to do well. It doesn't mean oil got more valuable just because, yeah, sure, the OPEC cut back in production, but also if you follow OPEC, a lot of these guys really don't follow the rules or the agreements. Not all of them. Some do, some don't. But understand, when you are an OPEC nation, you are basically saying that your main country's commodity or your main country's driver of economic growth is oil. So regardless of what the price is, you still have to sell oil. You still have to sell it. And if you're short in your social services or in your budget for the country, guess what you got to do? You got to sell oil regardless of what OPEC says. So again, I don't see much in terms of crude oil going higher right this very second. Break 85, it gets interesting. Maybe it turns into a trade. But I think we hit peak oil as CPI falls. And CPI has really just moved with crude oil prices as we peaked up in July, like we said last year. This is why the October lows are in, because inflation peaked. Now, the next part is the corporate earnings. Are they going to have strong corporate earnings? Are these multiples that we are now is basically multiple expansion? Apple has not really changed much in terms of their business in the past 3 months, yet the stock is up 19%, nearly 20%. NVIDIA, what have they done lately to to really earn a 90% return in 3 months. And again, I love Nvidia, but again, you have to take a look at pricing. 80% spike in anything else, we'd be crying hyperinflation. But since it's a stock that all of us own, more than likely, if you're a viewer, you're loving it. That's great. You know, when your house spikes 86%, I'm sure you'll be celebrating. But it really doesn't mean much unless you're planning to sell. So that's always important. In terms of gold futures, I still like gold as well. In terms of a trade, I don't like owning it. But again, we're starting to get a little long in the tooth as well. So maybe gold does pull back here, as we are hitting or nearing some kind of resistance on the weekly chart. As you can see, about 2089 is your resistance. You can get to around 2050. I said this, I think, a week ago or a couple weeks ago, that if you want to start sliding out, maybe taking some profits on your gold, this may not be a bad time. Could we break out? Absolutely. I just don't see gold moving that quickly unless we have some kind of recessionary fear. We have labor markets drop, something like that. Labor market pressure, labor market jobs, excuse me, the jobs, unemployment actually go up. That's something that would create a gold boom as an example, because of the fact that there's a little bit more fear out there. But the VIX is not screaming much fear there. 1863. If I may be completely honest, I think here you're starting to take a look at VIX calls. You're taking a look at some insurance here. You know, you buy insurance when you need, not when you need it, but when it's available. So again, 4,200, very, very key level. With inflation dropping, do you expect rates to stop increasing this year? Yeah, well, we're seeing rates fall. So if you're talking about bond yields, yes, those have been falling already. We've hit that peak already. And we expect the 10-year yield to get below 3%. By the end of the first half was my call. Maybe getting into the second half of the year. In terms of interest rate hikes from the Fed, I think we still get one more 25 basis point. I think what the market is looking now in a weird way is that in 2022, we hated the Fed. But right when we got that bank failure, I think right now the narrative is that the Fed wants to keep everything as is and not create more panic. But as they tighten more, again, that's more pressure on those balance sheets, more expensive on the debt. Guys, we had a lot of debt that was bought up in 2020 and 2021 with low rates. Those are going to roll over. Do they pay those debts off, whether these companies, or do they refinance at a way higher rate? This is the blowback of tightening, tightening, and tightening. When you keep doing that, you're going to break something, and then this could be a situation where we just really roll over back to the October lows. I don't expect that personally, but a nice retest of 4,000, why not? I mean, right now we're just in a range. That's all we've been really stuck in. You could see it here between 42.44 and we'll call it 3,700. Fat and flat. So nothing to get too excited about in terms of the CPI number. It's good news, not great news in my opinion. The only thing that would have made it great would have been if we got to a 4 handle. Then you'll see that, wow, inflation is really accelerating lower. But that 5% number, again, people are very fickle in terms of psychology. If we had a 4.9, I think that would have maybe lit the match on the Fed to stop tightening. For all we know, they say, hey, inflation's great. We're going to not do one. We're going to pause and wait. And then if they pause and wait, we expect the market to initially pop on that move. You're starting to see maybe 4,300, 4,400 initially. But again, those August highs are really in focus. Now, if we use the euro dollar, if we use any of those proxies like a Bitcoin, we've already broken that. The German DAX, 52-week highs. European stock market, Spain, France, England, 52-week highs. It's the United States stock market that's still kind of in a holding pattern. And we've been in a holding pattern, really, guys, since April last year. So again, 1 year we've been stuck in this trading range. Great to trade. Don't get me wrong. You can trade this tape, but to invest in it, whole different story. Not much to do there. Copper is up 0.29%. Again, another S&P. Proxy euro dollar 109.74. My target was 110. Remember we traded that last week, 132.96 on the dollar yen. That's down 72 pips. Again, that's a proxy for yields. Again, I had an alert for upside on dollar yen. I didn't fill that because it was too close to CPI. And Bitcoin futures about 30,000, 470. The target is 35,000 for the gap fill on the contracts. Ethereum needs to get above 2,000 to really get interesting. 2,000 for Ethereum is like 30,000 for Bitcoin. Those round number deals, that's super important in the market. Again, we like those round numbers. We like those headlines. Dewey Decimal System, top 10 this, top 10 that. That's our thing. Let's see. Anything else? All right, good morning. Everyone saying good morning. We'll make sure the chats are all good. Everyone all right? Okay, so we went over a couple things this morning in terms of the macro. Let's start getting into the trading aspect. What do we do with this, Carlos? That's great. I'm boarding class. I want to make some money. Let's take a look at it. Okay, so we're going to go to Apple here. Not a lot going on. I did trade Mary yesterday with the team masterclass. We got that break. Remember yesterday, I didn't play the 11s. I played the 10s. Got in the money. Got about 63%. It is for next week expiry. More than likely, we'll probably take a look for next week expiry. Let's see if we can break above 10.50 on Mara. And if we do, maybe we'll get an opportunity with a lower dollar, kind of ride that Bitcoin higher, because this is a nice breakout across the board in all time frames in terms of Mara. And again, I like trading Mara, Riot, Coinbase when I want to trade options with Bitcoin, as that being the proxy for it. Let's go and take a look at Microsoft. And again, I'm pretty much just going about all the the stocks that we usually trade. Big cap tech. That's kind of our thing because that's the one with the most volume. Microsoft hasn't got much. Again, 96.62 for AMD. We need to break that first. Again, didn't love this setup anyways. We talked about NVIDIA. Again, 282 maybe. Starting to get a little long on the tooth as well. I think we're going to get back down a little bit. Qs, we need above 321.60. Not the sexiest tape here, just not much. Caterpillar, I had an alert for a breakdown. It never broke. Did it break or did I not get that? We had the break here, 207. Yeah, we needed to get above around 207 or below 207 to play this gap fill. Never happened. Not much. Let's see SPY. I mean, for SPY, I'd rather just do futures and target 4,200, but we can always target 414.04. It just really isn't much out there, guys. I wish I could give you a stock right now, be like, yeah, this is what I'm looking at, but just not much. I just took a look at the mega cap names, and there just really isn't much movement right now. Seems we are going to be chopping around here. So maybe we do break above here on SPY 414, 415. I'll place an alert there. I doubt we'll get there today. Kind of disappointing that the CPI number being so did so well, excuse me, or was a good number, and you can see that nice but not great. And in order for us to profit, we want a little great or terrible, because we're traders, we're day traders. So I'll keep an eye on futures as we go, but in terms of really much in charts, nothing has really broken. Just gonna wait for Tesla and see if that does bounce back a little bit my way. Maybe we get a nice short squeeze. It is up nicely, mind you, guys. I have the 210 calls for this week, so we need a lot. We need basically a miracle, but in a sense, anything that any little more bounce here on Nasdaq maybe will help Tesla near term. Maybe we can get to 195 and then gives us a shot to salvage something. It happens, but we'll play it as we get it. Have a great rest of your morning. I will catch you guys tomorrow for the morning note, and have a happy trading Wednesday. Cheers.